Try again. Let's see. Try again. Let's see. All right, I think we're live now. Yes, we are, right?
Right.
Indeed. Okay. Hey, okay. Finally got it to work. Okay. Yep. So I'm gonna be playing a little bit of royalty-free music before we start, and it's gonna be just a couple of minutes, maybe 5 or so, until the rest of the team joins us, and we'll get right on the way. Here's some royalty-free music in the meantime. Oh, by the way, Gary, can you hear the music on the stream?
Yes. Sounds very nice.
All right. I'm gonna keep playing it until everybody joins us. It's gonna be a few more minutes, guys, and then we're gonna start. In the meantime, enjoy the chill vibes with some royalty-free music.
Hello there.
Hello.
Computer's booting up now. Seems to be working, so.
Okay. Yeah, I'm just playing a bit of royalty-free music before we start, so we can definitely wait a few more minutes for your computer to boot up and for Max to join us, and then
Perfect.
we can be on our way. Otherwise, I'll just share the templates on my screen, and then you can go ahead with the analysis. I think that could also.
Yeah.
Yep. Okay.
That works fine.
Sounds good. Back to the music. All right, are we all here? Looks like we are. Okay, how's your computer looking, right?
It's finally getting Chrome up. Give it 30 more seconds and it should be good to go.
Sounds good.
I'm
And
gonna join
Dino,
the
you might want to now to subdue music.
Yes, as the music has been subdued officially. I'll even close the window. All right. Hello, everyone. Just joining us on the call. It's going to be a bit more, maybe 30 seconds or so. We're just waiting for Brian's computer to start behaving, and then we're going to be on our way. A lot of stuff to cover today. For those just joining us, as usual, we're gonna leave some space for the Q&A part at the end of the stream. So any sort of coins that you would like us to cover from an on-chain and social perspective, anything interesting that you've been seeing on the market in the past couple of days and you want our opinion on, especially if it has to do with fundamental data, type in the chat and we'll leave room for it at the end of the call. So, if you're like, hey, Dino, I want to see what Ren is like. Well, you're in luck because I'm going to be talking about that anyway today. But if you have other coins that you want me to look at or us on this call, just type it in the chat and we'll get to it at the end of the stream. It's going to probably be about a 40 to 45 minute stream. And then we're going to be getting into some questions. All right. How's it looking, Brian?
It's a little laggy, but it looks to be working okay.
Yeah, it's actually a bit laggy on my end as well, so I don't know that we can do too much about that.
Okay.
But
I'll try and share my screen now, and we'll see how it goes.
okay, all right, sounds good.
Older computer, these things happen. Time for an upgrade.
Yeah, indeed.
Is this showing up okay?
Let's see. It's looking good to me.
Cool.
All right, let me just start recording on my OBS, and let me give us the intro, and we can start. All right, we're live. Hello, everyone, and welcome to another edition of This Week in Crypto. If this is your first time here, this is a weekly panel call where we, the Santiment team, and sometimes community members gather around and discuss recent crypto market events from a fundamental data perspective. So we're going to talk about interesting market insights and analysis that we've discovered using our own metrics and indicators. It's going to be about a 40 to 45 minute stream, and then we are going to leave some room for the Q&A session at the end. So if you've never used Santiment before, I strongly urge you to check out Santiment.net. We have developed dozens of tools and metrics, custom indicators over the last 3 years. This includes on-chain, social media, and development activity indicators, all with the single goal of helping you just better understand what the heck is going on in the crypto market and what is driving the behavior of its main participants and major stakeholders. So, as I mentioned, check out Santiment.net after or during the call, and also join our Discord because we talk about this sort of stuff every day in our trading channel. So if you don't want to wait until next week to discuss the market events and get our opinions on specific coins or talk to our community about the fundamental data, the link to our Discord is going to be in the description of this video. That's going to be it for our introductions. Brian is already sharing his screen. So the topic of today is how to manage risks in an altcoin season. So I think it's fair to say that we've seen a number, and we are continuing to see a number of altcoins breaking out despite Bitcoin's lethargic action. A lot of people are calling it DeFi season. Some are calling it a full-blown altcoin season. Regardless what you want to claim it or codename it as, it's no secret that we are seeing a bullish, breakout for a lot of altcoins. So with that being said, a lot of people are kind of getting into FOMO mode, hype peak. There's just a lot of, overwhelmingly bullish tendencies at the moment, which isn't necessarily great for people that are just getting into the market. It feels like late 2017 to some extent, where a lot of people got burned because they thought that the hype train will never end, that all of the coins are going to moon and we'll all get rich with Lambos. So we're going to try and talk today about various things and factors that might help you mitigate risks during these altcoin breakouts and generally during bullish cycles. Before that, however, we're just going to take a quick look at what has been going on in the market generally in the last 7 days. Brian already has a few templates ready on his screen. So Brian, take it away and let us know what you're seeing on the charts as far as Bitcoin and Ethereum are concerned.
Cool, Dino, thanks. So as we've gone over the last couple weeks, this is the model that's measuring the divergence between daily active addresses and price over time. This is the 2-year for Bitcoin. I'm going to zoom in here to a 90-day view that we now have to give an indication of just how we are looking just in the previous 3 months, especially in the last week or so. So these two dash marks are resembling the 50% and 90% range for bullishness over the past 2 years, zoomed into 3 months. Vice versa for the bearish 50% and bearish 90%. So right now, you'll see the lighter shading of green indicating times where it's crossing that high 50% range. And we aren't currently there. We're looking at 4 straight days under that dash mark, which tells me that we aren't really at even with this dip, we aren't at a range that is indicative of a quick bounce that may be occurring. Now, if we look at Ethereum, on the other hand, this is the two-year view, just to remind people of how it looks. We announced last week that we were about here, well over that 90% range, indicating that there was a major bullish divergence and we were getting an abundance of daily active addresses. And the only thing we were really waiting on was for Bitcoin to sort of wake up and ensure that Ethereum is going to be able to rise. So with a minor Bitcoin rise, we'll see a major Ethereum rise if it were to happen right now. But that's a big if, of course. Zooming into the Ethereum 90-day, just to give you a sense, this is a big deal. So 3 straight days above that 90% threshold tells me we're getting an abundance of daily active addresses. I want to show it on Sandbase here, just to give you an idea of how good these daily active addresses are really looking. So this is just the last 6 months, and it's impossible to argue that there isn't a very clear uptrend going on. Obviously, as price has gone up, DAA has as well. If we zoom out a little bit more, the divergence may become even more clear. So yeah, especially back in December when prices were at its low, DAA actually sort of bottomed out about a month after that in late January. But since that time, it's been nothing but upward movement. And there are a lot of people in the Ethereum space just waiting and waiting and waiting. And not investment advice, but if this trend continues, it will be very hard to envision that they won't be rewarded for their patience. A few others to look at on the DAA divergence. Basic attention token is getting lots of large green spikes like these. These spikes are basically measuring when the 2-year trend for basic attention tokens daily active addresses is at a very high end compared to its price. And even though price has been moving up, daily active addresses have been moving up higher, and I can show you here. Take a look at that. So this is why there are those huge green, neon green divergence spikes going on. Just in the past, let's see what that is if I zoom in, a little zoomed out from there. We have 3 months. Yeah, so just in the past week, really, or even the last, since the 4th. So we'll call it about a week. Basic attention tokens, daily active addresses have been firing off rapidly. Obviously, we hit a top when it hit its 3-month high, but DAA hasn't really settled down too much, and we're still at our 4th highest bar over the last 3 months, telling me I don't see this price retracting all the way down. I think we'll have a bounce soon for Link, and obviously with the amount of people supporting it and the social volume going off pretty consistently, kind of almost creating a new mean for how much social volume for Chainlink there is. Just in 2020, I think is going to change things a lot, because it's not just here, I'll show social volume here to show what I'm talking about. There's been such an increase in talk about Chainlink that I think it's becoming the new norm instead of just an isolated spike. So let's take off DAA. So we obviously had our big spike here, but if I zoom out to, we'll say a year, it's mostly moving upward since March. We obviously still had a lot of talk back here, but I think the frequency of these spikes occurring is matching where it was in February. And if we went all time, it obviously wouldn't be nearly as high. Yeah, so I think over time, we're going to start seeing spikes of this size becoming the new norm for Chainlink. And that's just indicative of its long-term sustainability. And in my opinion, this is a really great token to keep your eye on long-term, especially if our DAA divergence here for Link, excuse me, not BAT, for Link keeps up. And Link and BAT look very similar. So sorry for that mix-up. Link basically is getting the same sort of fire-off pattern here over the last week or two. And keep that in mind for BAT as well. Moving on to NVT, Bitcoin's having a tough time getting enough unique token circulation right now. We're still seeing in July an inconsistency when it comes to the amount of unique tokens being moved compared to its overall market cap right now. That's why we're seeing a red signal for July, and we saw it for June. And until that changes, I'm going to be a bit skeptical of the believers who think we're going to surge right up to 10K and past it in an instant. Obviously, there could be some whale holders that can change the whole narrative, but as it stands right now, our transaction volume, especially from unique tokens, does not appear to be there right now. On the other hand, just like we saw with DAA, Ethereum is having its third straight month of bullishness, meaning that it is not moving up in price as much as its token circulation would dictate. So this is a promising sign. Just like with DAA, it's basically at Bitcoin's mercy, just waiting for Bitcoin to start getting enough traction itself so that Ethereum can really start to do its thing. And for those of you who tracked my bold predictions article I put out a couple days ago, we see the same thing for Link. Link is on its 6th straight month of a major bullish divergence, and that's saying a lot considering just how much we've jumped up as of recently. So pretty big deal there. A couple others I touched on. Ren is looking great again. For those who think that we're sort of toppy, that may be true from a very short time perspective, but long term, according to this model, we're in good standing. We are getting a ton of movement with the network, and you know, it's number 54 ranked overall right now. I think it'll break the top 50 very soon, probably even the top 40 by the end of the summer. That's my prediction. And then for synthetics, finally, nothing but green. Now this is a little deceptive because the months that are tracking before this graph is showing that are used to compilate the averages in the calculations here, those were why those trend lines were so high before this graph started. But I'm using these months because they're the ones that are most relevant for the calculation. And July is having an all-time high best NVT right now, so something to keep in mind for these 3 altcoins in particular. Also a quick look, I wanted to show what's happening on the social side. Bear with me for just a moment. All right. Let's get that last one going. There we go. So Bitcoin has been negative for about, we'll call it a month and a half now, since late May, right about, yeah, May 28th, 27th or so. So a month and a half ago, we went from being extremely bullish to sort of uncertain that we're going to break 10K. And then, you know, almost a self-fulfilling prophecy came true because so many people were non-believers that we could jump back into the 5 figures and stay there, that we became negative and we became stagnant. And now we're actually starting to dip down to a notable territory. When we look at areas down to about negative 0.75 or alternatively plus 0.75, or above or below, that's when we will start to see an extreme view that can start to fake people out in the markets, get people off guard, and we look for negative signals like this to almost be used as rocket fuel for those whales out there who are looking for those opportunities where people are either extremely negative or extremely positive to do the opposite and shake things up and get the best prices for themselves. So right now, we were sort of creeping up and we're starting to drop down again. It looks like the recent drop to 9K and hovering between 9K and 9.2K is making it appear as though it's an inevitability for a lot of people that we're going to hit 8K again and start to slide down. But according to this is actually a good sign for the bulls. We want to see it negative. We want to see people sort of calling for a downswing in order to actually see a real life upswing. And going over to Ethereum really quick, it's actually a similar story. So Ethereum has dropped more recently. They were actually extremely bullish during the time when Bitcoin started to go negative. And they ended up actually sort of being right. Let's see if I can zoom in a little quick. It'll better show what I'm talking about. So we got really positive here, and then right after people stopped caring about it being so positive, that's when we got its spike. And this is very, very common with how social sentiment works. And then we went negative and got another bounce. Right now, though, we're kind of in a middling range where it's not enough to really be extreme on either sense at about negative 0.24. So it's essentially even, but a little on the negative side. If we start seeing it go to about negative 0.5 again, that's a very solid sign that Ethereum is going to start pushing upward, because as we can see historically, when things are low, 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 that's when we get future bounces coming. This one especially, down by past -1 or +1, that's when the opposite seems to come true very often. Just as we saw here, almost actually got over +1.12. We saw a local top, and it didn't really almost got to -1 again, and rinse and repeat. So interesting stuff going on with the majors, and I'm going to hand it over to Dino to talk more about alts and what's happening with DeFi, things of that nature.
Thanks, Brian. Can you stay sharing your screen for just a moment? I wanted to go back to that price DAA template for Ethereum because it's quite interesting. I think, yeah, if we can zoom in the last maybe couple of months, I think it's so last week I think we've also touched on this. This has just recently been a template that you've been working on, and we talked about this major sort of spike above the thresholds that you've set, which indicates that compared to the price or relative to the price, the actual amount of on-chain activity for Ethereum is extremely high. And that should kind of bode well for the price of Ethereum as well. And so far, it hasn't been a massive breakout, obviously, but Ethereum has been trending upwards since, right? One thing to keep in mind, and I think we mentioned this last time, but just as a reminder, is that the last time we have really seen these levels of activity for Ethereum in terms of its network activity, it was around the, I think, 2018 top. Like if you go to Sandbase and look at Ethereum's daily active addresses over the last 3 years or so, we can kind of see what was the last time that Ethereum's network activity was this high. Now, why this time might be different, I think, comes down to a few points. Point number one is that there doesn't seem to be, first of all, the price action is completely different. So the price context is very, right. So currently, as you can see here, let's start with that. The spike that we see around, what is that, July 6th to 2020, a few days ago, That spike, yeah, it correlates almost identically to the top that we've experienced in mid 2018. Um, yeah, let's go back to all time maybe so people can see.
Yeah, I just wanted to put up the 1 year so we could actually see the date of when it happened.
Yeah, okay.
18, there we go. So yeah, exactly, almost the identical level.
Right. So that's, it's quite interesting that these are sort of, if you were to put it in historical context, this wouldn't necessarily be a great sign for Ethereum, because if you look at early or earlier to 2019, you can also see these massive spikes in daily active addresses around its previous tops. So the reason why this is different is twofold, I think. Number one, the price action is completely different. The Ethereum has been in like long-term, well, relatively long-term consolidation. It's been almost more than a month that Ethereum has kind of just been ranging along with Bitcoin. So the market context is entirely different. This isn't like there's not really a whole lot of sell pressure due to a price rally or price pump that would justify this sort of network activity. Whereas previously, I think it's fair to say that a lot of this network activity, around the Ethereum 2018 tops was speculative in nature. And that comes to my second point, which I think that, and we've seen this as well, is that this latest growth in Ethereum's on-chain activity seems to be more utility driven than in the past. And if that indeed turns out to be the case, and if this is a sustainable trend, then these spikes in daily active addresses would indeed be bullish. And this is also the reason why you haven't really seen, like on Brian's chart, you don't see this price DAA divergence in 2018, because the price has been growing along with daily active addresses, whereas currently, yeah, so it's just red, right? Whereas currently,
Exactly.
we're seeing a major sort of pivot from historical trends, where in the past, Ethereum's daily active addresses were this high around tops and price rallies and incoming corrections. And currently, I think this is the first time in Ethereum's history that we're seeing this massive rallies in Ethereum's network activity, despite the fact that it is boring as heck as far as price action is concerned.
Yeah.
Yeah.
And it doesn't always happen right away. I mean, we can look at just the very edge of this graph when it started. You can see that we were getting massive red, but the price was kind of not doing what was expected. And it even was going up slightly before it finally made an absolutely massive, decision to go lower due to mostly what Bitcoin did itself. But we all know that Bitcoin, Ethereum's daily active addresses and overall network activity are going to be fairly correlated in many cases, with them being the top two coins. And we'll often see an elongated stretch, but you won't see it contradict it for too long. Like, even though we saw that little upswing here and that just grew, the neon red, because the daily active addresses were still, showing how little there actually were. Eventually it sort of gets a little stagnant here, and then it makes its break. So we're seeing what I think is sort of the exact opposite. And of course, we could all get faked out and daily active addresses could just cease because people get too tired of waiting for the breakout. But I think in every case where there's been neon green or neon red, the correct outcome that this model predicts eventually comes to fruition. And we can, I compare, as Dino was saying, I compare this a little bit to what we saw on a minor scale right here in April of 2019, where we started to get some pretty big spikes in DAA, particularly right around the 19th year. And eventually, after people probably got a little faked out by a very minor correction here, Ethereum did what April was predicting it would. So.
Right.
Interesting stuff there, and we just have to see how it plays out. But I'd say the likelihood of it going up seems to be a lot more than it would go down, as long as Bitcoin sort of shapes up and figures out a direction to move, hopefully up.
Yeah, the latest spike, or this July 6th spike or whatever it was, the biggest one that we've seen recently in Ethereum's daily active addresses. I've seen a few people online, including Larry Sermak, mentioned that this might be very well due to the Plus token starting to move their coins and interacting with thousands of addresses, creating new addresses as to try to basically wash and mix the Ethereum that it was sending across the network. And this might very well be
Hmm.
the case. I think it kind
Yeah.
of correlates very nicely. However, the general trend, even if we kind of assume that a lot of this spike has to do with Ponzi schemes trying to wash trade their coins and move them across a variety of thousands of addresses, I think the general trend can't be denied. It's been going on since the start of the year, and even in the past couple of days, we can see it. Although there's been a slight drop, I think over the weekend, which is usually what you see, it's going up again, even without the plus token activity. So
Yeah. I think a Ponzi scheme, no matter how large it is and how elongated it is with time frame, I don't think it's able to do this for the second overall market cap with what is it, a 10 figure, or what is it, 9, 10, 11 figure market cap.
right.
I'm trying to do, what is it, 10 billion to that range. But I mean, it could definitely, a Ponzi scheme could affect a smaller cap coin outside of the top 10 or maybe outside the top 50 to this extent. I just can't envision that would be the case. It could have had a lot to do with this all-time high, but it's not going to, ever since Black Thursday cause this amount of trend.
Yep, exactly. Okay, good stuff. Obviously not financial advice, guys, but according to some of our on-chain and social indicators, Ethereum is looking pretty nice. We'll have to just wait and see what happens in the next couple of days or a couple of weeks. But whether Ethereum is finally going to be able to decouple from Bitcoin if Bitcoin decides to still kind of be stubbornly ranging in this sort of frame that it's set up for itself. But as far as data is concerned, it's looking pretty nice at the moment. All right, moving on from just general market analysis. By the way, guys, as I mentioned already, if you have any specific questions or coins that you would like us to cover at the end of the stream, ask us in the chat. If you have any questions about what we've been talking about in the past 15 minutes, also ask us in the chat and we'll get to it in the Q&A part of the stream. All right, moving on. So as I mentioned already, with this sort of altcoin breakout and the altcoin season, so to speak, there comes a lot of risk associated with it. So a lot of people have been talking about, this latest sort of market-wide bullish sentiment emanating from the proliferation of DeFi-related solutions and DeFi-related tokens. And so we've just recently, if you go to insights.santiment.net, Kelvin, our in-house DeFi guy, has published a great article of just how you can use supercharging a crypto portfolio with DeFi. Here it is. Of just how you can use DeFi or DeFi to take your crypto portfolio to the next level, right? And he goes into a lot of detail about various sort of top platforms and how to sort of get the most bang for your buck, how to not get burned. I strongly suggest checking out the article if you are kind of new to DeFi space and yield farming. It's a it's a great overview for beginners to figure out exactly what the DeFi hype is about and how to start applying it in your everyday portfolio management. However, Kelvin, I think you're here, right? The topic of the day is how to manage your risks with these altcoin breakouts and DeFi breakouts as well. So I guess in general, what I'm wondering is, despite all of the benefits that we've seen, and despite all of the growing popularity of all of these DeFi related solutions and lending protocols, what are some of the biggest risks involved with interacting with these platforms and in general the DeFi movement that you would want to kind of shine some light on and attention to so that people don't really get burned as they try and traverse this entirely new sort of ecosystem and use case for crypto. If you want to share a screen also, I can stop presenting mine.
Hey there, guys, can you all hear me?
I can indeed.
Okay, great. So yeah, I can find my unmute button. So it's all good. Just let me now. I have to share my screen. Where is my screen? Let's see. Contact. I think it's this one. All right. Let me know if you guys can see it.
Yep, can see it well.
Can you guys see it? Okay, so it's the supercharging one, right? How about this? If I switch the tab, do you guys see compound right now?
No, I cannot.
Oh, no. Okay, then I will have to switch to something else. Hold on. A window instead, yes. I think this one. Okay. All right. How is that? Okay, you can see all the different tabs, right?
Yes.
All right, sweet. So yeah, with regards to risks involved, of course, the biggest ones I've mentioned here in the article. This is general, but the three big major ones, like any smart contract exploits or hacks, as we have seen in previous times, when I think one of the DeFi platforms, a project called VZX, which is also releasing their tokens, unlocking their tokens rather, pretty soon. This was back in February, where someone actually used flash loans to exploit it. So yeah, so there are this sort of risks involved, and if yeah, if you put your money there and it gets drained, then being the nature of how things are
Sorry,
in
Kelvin,
this space.
can you just get a bit closer to the mic? Like, I can hear you fairly well, but I think I could hear you better if you
Yep.
were a bit closer.
Oh, okay. I think this is as close as I can get, I think.
Never mind then. Okay.
I'll try to speak. I'll try to speak louder.
All right.
So yeah, so you have decentralized platforms, and yeah, you got no one else to go to except maybe the team, and there's only so much that a team can do for you. So yeah, it's not like a centralized entity where you can, sue them or make a claim of something. So yeah, gotta be careful on that. Collateral getting liquidated is another point as well. This is mainly because of people's own doing. So this is outside of the protocol's fault. So if someone is taking way too much risk and say maybe using ETH as a collateral to borrow DAI or something to go 4 times leverage on mining comp tokens on Compound, on Compound, then if there's a black swan event and yeah, unfortunately Ether's price crashed to, I don't know, maybe $10, then yeah, you'll be probably liquidated, and then with that it cascades the entire borrowing lending process that you might be having. And it really depends on how deep the user is going into DeFi. Some of them may borrow from Compound and then open up a liquidity pool in, say, Balancer, and then earn BEL tokens and whatnot. So if one cascades the other, then suddenly you have a lot of things going on there. So I would definitely keep things simple. That would be good. Stablecoin depegging is also another one. So let's just, at the moment, like right now, it's a good thing, but if it's on the flip side, it will be a bad thing. So right now, I think DAI, one DAI is not one USDT or one USDC. One DAI is, I think, like maybe 2% higher or 1% higher, I think. Yeah. So this is a good depegging in terms of if you need to pay back any debts, you can actually swap it to the other coins, and then you actually get a discount. But on the other flip side, if DAI depegs on going below $1, then yeah, things will get really chaotic. So if you did like stablecoin, providing stablecoins to say CurveFi itself, and then yeah, if you deposit it here, and then to say, for example, one of the pools, I think maybe just take their I think the Y pool itself. Yeah, so it relies on the basket of like 4 tokens, and if any of them actually depegs and someone decides, or the entire population decides to withdraw all their tokens, um, then you might end up be stuck with something that you don't want if one of the stable coins is not of value, or you will run into very high slippage issues when you're withdrawing the least popular token over there. So yeah, it's important to note those risks. But of course, with all this, interestingly, in our space, what you can do as well. But before I go there, maybe oh yeah, to minimize the risk on the platforms and everything. So I think it's worthwhile getting educated, or at least be informed on the various platforms that one would use. In the article, I mentioned 3 platforms. It will be Compound, Balancer, and Curve.finance. So it's worthwhile to actually study their audits. So you can go to their site, check out their audits, know what's going on, or maybe just like do a quick overview. I know not many people are very technical into it, but just do a brief run through. Or if you need like resources, you can maybe search on Twitter and see what people are saying about their audits. That would definitely help. Among the 3, I think Compound is showcasing the best audits in terms that it's been around long enough, and also the amount of audits that they've done and battle tested really. So it's pretty solid. But of course, the use might be very different. So if you look at, say, right now, the best use are on Balancer, which is around, I think, 40% use, taking into consideration the price of the Bell token. So they only have like, I think right now only 1 full audit. So that's the kind of risk that you kind of can take note of. It's good that they have an audit, but it's only 1 audit. And of course they have like bug bounties and all that going on. The other one would be Curve.finance. They also have audits going on. I think they've recently done, in March. So that's as far as you can go, but yeah, it's better than nothing. So if there's any upcoming platforms that people are shilling it to you, or like people are talking about it, it will be worthwhile to check whether they have audits to begin with. And sometimes if something looks too attractive, it might be dangerous. Say, for example, I can't remember what was it. There was some other token that was launching, and people were saying like, oh, you can find it on Uniswap. And what happens on Uniswap is that because anybody can create a liquidity pool and create their own tokens, what happened was that people actually buy the wrong token. It is actually based on a false address. So I can give you one example. Let's see. I think there's a pool.balancer. Yeah, there is a pool on Balancer. Actually, it might be easier to go by this way. There's a pool on Balancer that is actually having a fake red tokens, if I'm not wrong. Yeah, I'm not sure whether it's still there. Yeah, let me search. Yeah, so if you bought from that, no, not that one. If you bought from that particular pool, then you would definitely lose your money. So I think this might be the one. I think this might be the one. I think this is the one with the fake rent tokens. No, not this one. But anyways, there's one particular pool with fake rent tokens, which is 50-50 allocation weighted. And if you bought anything from that, then you'll be kind of screwed. So it's good to protect yourself on that end. Also, just to give a overall view of how much money been attacked, at least, or drained. So far, we can see, like, I think Camila actually did a good overview on it. Yeah, with Balancer being the latest one, I think. Yeah, but all these are mainly using exploits and whatnot. So do take note of those risks. I think so far, yeah, good amount, I guess. But good thing, recently, good thing. I realized that there's actually insurance that you can get. Smart contract cover, if anyone's interested. Pretty interesting. I think it's worthwhile checking, but I think they might be maxed out already, given that everyone's trying to do yield farming and cover their bum. So you can choose from various smart contracts that you want to cover yourself, and up to the amount and the period. Nexus Mutual is actually providing this, which is quite interesting. Not many of those projects in the space. So yeah, I think that's about it when it comes to the risk side. Any questions before anything that you guys need me to cover?
I just think it's interesting how close we're getting to, mirroring and emulating traditional solutions, although all the way to insurance on the loans. Yeah, it's just in a decentralized way. It's kind of funny. No, I think you covered it pretty well. I might be wrong, but the balancer's exploit was it didn't result in users losing funds, right? The project kind of covered the expenses. I think it was what 500,000 that worth dollars worth of tokens that were exploited or stolen, something like that.
Yeah, I mean the funds were drained and all that, and users did lose the funds, but it was a nice step that Balancer took to actually reimburse everyone. But it also sets a precedent, a very bad precedence on these kind of matters. It's kind of like encouraging others to like, hey, try to exploit other pools so that this guy can pay for it. That's a very hefty buck bounty if you look at it that way.
Yeah.
But at the same point in time, one has to note that they did recommend not to put a deflationary token into a pool, and it may run into issues.
Mm-hmm.
And if you want to take the decentralized ethos, then honestly, no one should get reimbursed for it. Yeah,
Right.
it's just like the DAO hack that Eve went into, and at the end of the day, there's a portion of people that did lose money and never got back their money. But
Yeah.
yeah.
Okay. I think that's pretty good cover. Thanks a lot, Kelvin, for just the general overview. Guys, we'll be having a follow-up article on the decentralized finance solutions and just generally how to make best use of them, risks involved, coming up probably next week. But in the meantime, I once again strongly urge everyone to go to insights.santiment.net and give this article some love. Gary, if you can share the link to this article in the description, or sorry, in the chat, just so people can have direct access to it, that would be great. Okay. Max, are you here? Let's see. Yes, indeed you are. Do we want to spend 5 or so minutes on DogeCoin and the
Yes.
hype
There was a
around
question.
it?
There was a question. What is the price expectation can be used? And I think this kind of question exactly shows that we need to address this topic.
Yeah. Okay.
As there is no value and there is no reason to believe Doge will be ever used anywhere.
Indeed.
But it's an indicator, a special kind of indicator. So please, Dina.
Okay. Do you want to share your screen and show us?
No, I'm not prepared because on my screen too many things open.
Okay. Let me try and do mine then. All right. So we've seen a sudden and seemingly random, but not so random breakout of Doge in the past couple of days. So let's look at its just price action recently. I think it pumped by, what was it, like 80% or maybe even higher. Let's see. Sorry for the slight lag in my loading. It usually happens when my bandwidth kind of goes crazy with streaming and sharing. So this has been DogeCoin in the past 4 to 5 days. We saw this massive rally out of nowhere, which was not that random at all, actually. The reason, or the main sort of suspect or culprit for the rally, was a TikTok video that one of the influencers on the platform made, basically saying, "Hey, there's this coin called Doge. It's practically worthless. It costs nothing. Let's pump it as much as we can, and then if it ever goes to $1, you will get like $10,000 on your initial investment or something like that." So this was the reason why Dogecoin started breaking out. Now, what we found interesting is that first of all, let's look at Doge's social volume, or the amount of mentions related to DogeCoin in the past 6 months, and then I'll zoom out so you can see historical trends. Yeah, so we see this basically massive spike in social mentions for Doge. Obviously, in the past 24 hours or so, the coin has already started declining, retracing back to its sort of, or getting closer to its pre-pump levels. But if we look at Doge's all-time social volume, there we go.
Set dominance.
We look at its social dominance, which is basically social dominance is the relative social authority or impact that the coin has compared to a pool of about 50 different assets that are also popular on crypto social media. So essentially, the percentage of the coin's mentions, or the share of the coin's mentions on crypto related social media compared to other coins that are being talked about the most. So, is Doge's social popularity kind of overtaking some other coins, limelight? And if you look at its social dominance, and if we compare it to the price of Bitcoin, let's see. Okay, so let me actually zoom in just a bit. I think I can even cancel the price of DogeCoin itself, right? Let's see. So, and then actually let me reintroduce price of Doge. Social dominance. No data for the requested period. Huh, okay. One sec, guys, sorry. Interesting. Let's try and recalculate it. Okay. So I want to kind of, if I can, remove these big spikes in social dominance, because they're kind of related to just the general, inception of Dogecoin. Let's see. Hopefully, this social dominance can still survive my zooming in. But in general, Max, I think, yeah, I think what we kind of saw is that the sort of social volume related to Dogecoin and the spikes in Dogecoins kind of had the similar or interesting relation with the price of Bitcoin over time, right? Especially like when you see the amount of Dogecoin mentions here during the 2018 and 2017 tops, and then right here again around the September of 2018 tops. Right here, the like smaller spikes in social dominance. It seems like when Dogecoin is trendy, or when the social mentions of Dogecoin are rising, it kind of indicates the peak of crypto market mania, so to speak. Would that kind of be accurate to say?
Yes, Doge is for those insiders in crypto. We use it as a very nice and meme to represent the vibe of community. All the things you know about Doge. 4 legs, such stable, much wow.
Yes.
But when it becomes not stable, something happening. It only happens in extremes, when market becomes very irrational, because only irrationality can explain any valuation to Doge. Okay? And people even find rational reasons why it's so valuable, but there is none. Doge it's a fun. So don't ask yourself if it will be adopted. It will not be adopted. It will not be used. It's an indicator, and it's used for many fun things. And this is the main reasons. It's just crypto as it is. And once we see it's dominate the social space to some degree, and the price pumped, we said, oh, okay, so we went into irrational territory, and this is a very nice indicator. Yeah, so we use it as this.
Yeah. So
and
if
you're early, you're early into pump, okay, enjoy it. But if you're late, don't chase it.
Here we can see kind of the correlation between Doge's social volume and price of Bitcoin in during the Bitcoin's all-time high, kind of mirroring the tops or peaks in Bitcoin's own price action. We can see it here as well. I think this was something to do with a marketing campaign that Doge had at the time, or something that happened with the coin. Maybe Elon Musk tweeted about it at this time. I'm not entirely sure. And then we had another spike here around Bitcoin's July 19th top. And so we're having another one now. Now, obviously, Bitcoin at the moment is kind of just threading water and not really doing all that much. But in general, Doge-related mania has in the past tended to relatively correlate with peaks for general bullish market sentiment. Once again, like this time, I think it might be a bit different just because of the source of the amount of mentions for Doge recently, which is basically just one guy trying to pump the coin, which I'm not even sure that he's necessarily all that familiar with cryptocurrencies in general. Like he literally starts his video saying, hey, there's this coin called DogeCoin. So he is not really talking to industry insiders. He's talking to teenagers on TikTok and just like, let's do some random stuff and try to pump this coin that has zero value. So as far as its long-term price potential, I would probably assume that we're not really going to see another bounce back for Doge, especially if we look at its social volume and we look at the relationship between Doge's social volume and its price. I think it's often kind of spiked around its tops. So we can see it here, here, here. This is, I think, as I mentioned, Elon Musk related. Here as well, here as well, here as well, and then now at the moment. So as far as Doge's price potential, at least related to its social data, it's not looking all that great.
Hey, Dino?
Yeah.
I'm not sure if we have enough data to get some decent social dominance, but it's probably worth exploring just to see from a percentage basis how it's doing as well. And if we do have data, that could be a cool thing to compare to Bitcoin's price. That might even give a more accurate portrayal.
This is what Dino showed you.
Let me see if we can see exact percentages.
I think it was 5%.
Oh, around 5?
Yeah, I think when we're checking the 5% is already critical.
Yeah, that's a really telling graph right there.
Let's zoom out so you can see it all the time. So, and compared to the price of BTC. Yeah, in general, I think 2.29 to 5% is usually when you see these. So let me turn off BTC. When you see these sort of dips for Bitcoin's price action. So anything like here as well. So currently,
interesting that it was sort of a bottom indicator too.
Here it was, but I think, like I said, I think this is.
It was Elon Musk.
Yeah. At the moment, though, it's around 26% or something like that, something crazy. Or it was. Let's see. Yeah, 18 and 14.
20, 24, I think I saw.
Yeah, I'm trying to 24. There we go. So So yeah. Anyway, just something to keep in mind as well. Maybe a novel risk indicator when you see DogeCoin mentions going off the roof. It might be a bad time to enter the market. One final thing that I wanted to show, because we're already kind of running low on time and I wanted to leave some room for a Q&A, is I wanted to tell you guys about a new metric that we have. Well, it's kind of an old new metric. We had it before, but we've kind of improved it and reintroduced it to the platform, and I think it's just amazing. So I'll show it. I'll show how you can use it in an example that I wrote about yesterday. If you want to check it out, you go to Insights and read my article about Ben Protocol that I published yesterday. So the metric that I want to show you is our top transactions table. So essentially, until now, you were really on Sanebase, you were mainly able to see these market-wide trends. You know, if you saw, for example, a spike in a certain coin's exchange inflow, you could say, all right, so I'm seeing there's a spike in sell pressure, right? There's an increased sell pressure for this particular coin. Let me show you what that looks like for Band. So we see the spike in Band's exchange inflow, right? And we can definitely say with high level of certainty that there's a massive amount of Band being moved to exchanges during a rally, which is probably indicating a very sort of steep rise in sell pressure and probably a forming sell wall. Now, the question that you might have in mind is this an isolated incident, i.e., is this just one or two whales kind of trying to get into position, or is this a market-wide or network-wide trend? Are all of Band's holders kind of trying to take advantage of the rally and move their coins to exchanges and take profit, or is this sort of an isolated incident? And in general, where is this sell pressure coming from? Now you can find out with a new metric that we introduced, or it's actually a table, where the way you get to it is you go to network activity, you scroll all the way down to transaction volume, and then you open the top transactions table and you apply it to the chart. And here's what you'll see. Oh, by the way, let me zoom in my screen, or full screen. All right, so what you'll see is the biggest transactions for a coin in question for a specific time frame that you have selected. So currently we're seeing the biggest transactions for Band in the past 30 days. However, if I wanted to look at this particular spike in particular, and I wanted to know exactly where this exchange inflow came from, I can hold Shift and zoom in on the chart, and you can see that now the time frame that I'm looking at has changed. It went from it's now from July 4th to July 10th, which should be enough. Now, we're still trying. There's a small bug in the code where when you filter out by value, it doesn't immediately filter or rank transactions by its highest amount. It's going to be fixed in the next couple of days. But already we can see that one transaction stands out from everything else. So all of these other top transactions for Band are kind of 9,000, some a bit higher, 75,000, but there's nothing as big as this particular transaction happening on the 8th for 925,000 Band. Now, if you look at the total exchange inflow, which was at the time, let's zoom out a bit actually. Oh, it was 945,000. The total amount of Band that we saw moving to exchanges. Almost 95% of it came from this one transaction, and you can see it went from an individual wallet to a known exchange wallet. Now, if you want to do more analysis on this, you can click here and open Etherscan, and we can see exactly where the money came from and where it went. We can see that the funds came from this address and they went to Binance 2 days ago, 925,000 or about $1.5 million worth of Band at current prices. Now you can also then do some additional analysis. I mentioned this in the article where, let's say we want to find out, how long did this guy hold these coins for? Was this a sort of spur of the moment? Was this a short-term holder, or is this a guy that held these coins for an extended amount of time? What you'll be able to find is that most of his funds actually came in from 4 different addresses 2 days ago, and then once it accumulated these amounts of coins from different addresses, it in one fell swoop it sent it all to Binance. I'm not going to go into each of them. I'm just going to go into the first one because pretty much all 4 addresses follow the same pattern. And what you'll be able to see is that he started accumulating all 4 addresses probably belong to the same individual because they look like this. In all 4 of them, most of the coins were acquired about 204 days ago, and then there were a few additional accumulation periods before sending it all to Binance. The final thing that you can do then, or taking this sort of granular analysis full circle, is that you can copy this address and we can go back to Santiment, and we can plug this address into our historical balance tool, so we can visually see what these guys, what this person's holdings of band looked like across all time. So let me show you that real quick. As soon as I load. There we go, labs, historical balance, and I paste this address. And now we're just gonna wait a bit for our system to find all of the coins that this address had, or that passed through this address. It's going to find band. There we go. Currently it has 0, but it had band in the past. We can plot it against the price of band, and we can look at it all time. And there you go. Actually, let me zoom in a bit. It's, let's say, from 2018, January 1st, all the way to July 10th. All right, show me the money. There we go. So you can see that this particular address started accumulating band here. It got 125 band on December 18th, 2019. It then purchased 125,000 more band here at its sort of local bottom, probably around the same price. And then the last batch of band that it acquired was around this local bottom here. So this guy probably, or seems to know what he's doing, at least as far as when to accumulate band. And it started sending all of its coins here right before this small correction that we are currently seeing right here, right? So this is, I think, something that's very interesting if you want to do very granular analysis and figure out where the sell pressure is coming from, and then maybe keep an eye on this address. If you want in the future, you can generate an alert saying, okay, let me know when this address starts accumulating band again. When the balance of band in this address goes up by a certain threshold, you can create an alert for it. But in general, I'm very excited about this metric. It's been one of my favorite metrics in Sand data for a while. Now we have it on Sandbase as well. If you really want to know where the sell pressure is coming from, or any sort of transaction where it's originating, you can now do so on Sandbase. Yeah, that's what I wanted to show you guys real quick. Are there any questions, Max or Gary, from the chat that we can kind of go over before we call it a day? Any sort of coins that people want us to look into? Any sort of questions that they would like us to answer before we sign off for the week?
Yeah, at the very beginning we had an interest expressed towards Chainlink, QNT, and DMG. Okay,
let's start with QNT because I wrote about it recently. So if you go to Insights, need to zoom out. If you go to Insights and you look at my recent articles, you'll see I wrote about several signs that QNT was about to dump before it did. There were a number of indicators that the coin was headed for a correction ahead of its, Overledger release, which happened here. And let me just quickly show you what that looked like. And then we can maybe look at kind of what it's currently doing, because it seems to be consolidating like crazy. It doesn't really know what it wants to do. But very briefly, so we had this huge sort of rise in bullish sentiment towards QNT. It started right here along this spike. This spike is due to an announcement that Quant Network and SIA, which is kind of a European sort of leader in finance, and I think a European high-tech company leader in the fields of payment service and infrastructures, they did a successful blockchain interoperability test here. So this led to sort of a first rally for the Quant token. It rallied about maybe 40% in 24 hours, something very crazy. And then obviously it kind of stopped for a while, started consolidating. And then once again, we had Right. So this additional sort of spike came as people were expecting another rally because Quant was supposed to release the Overledger network here, as it did. Yeah, so there was the anticipated launch of Overledger Network on June 30th. A lot of sort of people looking forward to it, but at the moment, at this particular moment before the dump on June 30th, we saw a rising number of concerning signals for Quant. Number one is the amount of coins being moved to exchanges has risen quite rapidly before the correction. We saw the elevated token activity is similar to what we saw before this correction or this consolidation period here. So the amount of coins, unique QNT coins being moved on the blockchain has risen very quickly or very actively around this sort of uptrend here, and then here as well before the correction. You can read about all of the different points or clues that the QNT was headed for a correction before the Overledger network kind of got published here or got released here. Now let's look at what is happening with QNT recently. Let's look at its on-chain data. Let's say network activity. Let's just start with daily active addresses and see what QNT's on-chain activity is looking like. Yeah, all right. So definitely some divergence here, which isn't necessarily a great sign for QNT's price long term. We see that the general amount of network activity has started to decline quite heavily after the Overledger network got released, something that we see quite often. And these sort of divergences do tend to correlate with short-term price stops, as we see here. So, for example, we saw QNT here start to rally and the the network activity rallied with the price. However, once the daily active addresses or general network activity started to decline, there was a waning interest in the interaction with the coin. The price tried to push upward once again, but there was not enough sort of fundamental support in order to sustain a rally. We saw a similar problem here. There was a rising daily active address or network activity right along with this rally here. But then once we got to this stop, we started retracing back to its pre-pump levels as far as daily active addresses are concerned. And so this led to another sort of consolidation period for the price of QNT. So the fact that we're seeing a strong decline in its overall network activity is not a great sign. That said, the network activity is still relatively high. Like let's look at the all-time values just so we can figure out exactly where we are. Yeah, so current network activity is not too low compared to historical trends. Obviously, you can see that even in the all-time high, we saw a huge spike in daily active addresses, and then once we started to see diverge from the price, there was not enough fundamental support to really sustain its rally any further. So I would look at this as a relatively concerning sign if we continue to see the amount of activity on the network declining, even though the price is trying to consolidate or trying to push upward once again. We're probably headed for another short-term correction. Now let's look at the general sell pressure or amount of sell pressure for QNT recently. Let's zoom back into the last 6 months. Let's cancel out the daily active addresses and look at the exchange inflow for QNT, or the amount of Quant tokens being moved to exchanges. So obviously you saw several spikes here around the Overledger network release, which is not surprising to me at all. I think it's quite to be expected that people were going to be moving their coins to exchanges in expectation of a network release. And the rally connected to the network release. However, since then, we haven't really seen all that much in terms of sell pressure for the price of Quant. Let's see the actual supply of QNT on exchanges and how it changed over time. One sec. Yeah, there we go. So let's cancel out exchange inflow. There we go. So the actual amount of QNT currently being located in exchange wallets isn't all that high, which should generally be a decent sign for its price action, right? The fact that we're not seeing a sudden increase in sell pressure, at least not yet, should allow the price of QNT to rally a bit further or a bit more up before we see the holders try to offload their bags and take in some profits. Now, one metric that I do like, obviously we can't go into all of the metrics and do a full-fledged analysis right now, but one metric that I always like to look at is the 30-day MVRV, which is basically trying to calculate the average profit or loss of short-term holders. So basically, for example, if we look at it here, we see the 30-day MVRV being 1.4%, 1.4. Which equates to the fact that the short-term holders or the holders that have acquired QNT in the past 30 days at this point in time were 40% on their initial investment. That is what 1.40 indicates here. So they were essentially 40% on their, their ROI or their profit margin at this point in time was around 40%. And this is the time where they started kind of offloading their bags. So you can see the MVRV start to decline quite heavily here, actually, even though the price was still pushing upward. What this is telling us is that short-term holders were starting to offload their bags already. Essentially, the MVRV was declining, meaning their profit margin was declining, meaning that they were selling their coins. However, the price was trying to push upwards, but because of this sort of short-term sell pressure among short-term holders, it was no longer able to sustain another push upward. So we saw another sort of strong spike in the short-term MVRV here, where it was around almost 30%. Short-term holders were about 30% in profit at the Overledger Network's release, which historically, let's look at maybe the last year, it seems like it was a relatively dangerous level for QNT. Yeah, so if you look at historical trends or the sort of historical levels, MVRV levels at which short-term holders tend to sell or tend to offload their coins, it's anywhere between, what is this? So 1.28 and 1.34, 1.49, so almost 50%. And so we had this massive rally here, which went to all the way up to 1.73. But anything above 1.3, 1.28 is probably considered a relatively dangerous zone as far as QNT's short-term holders are concerned. This is usually the time or the profit margins at which they are, relatively content with selling their bags. At the moment, I would probably ignore this dip. I think it's just a dip in our data rather than an actual dip. At the moment, the MVRV is looking okay. It's not looking too great, but at the same time, it's not looking too dangerous. So the short-term holders are currently about 20% of their initial investment, which at least according to historical trends, usually wasn't enough for short-term holders to really start offloading. But they tended to wait a bit more for their bags to overflow, so to speak, before deciding to liquidate their position. So we could see the MVRV, the 30-day MVRV rise a bit higher. I would say anything above 28 or 30% would be very dangerous for Quant. So overall, isn't looking great, but at the same time, I wouldn't necessarily say that we're seeing, top indicators overflowing for the coin at the moment. I think it could probably try another push upward, although fundamental support is starting to decline as we saw in daily active addresses. I think that's going to be one of the things to keep an eye on. So exchange pressure or sell pressure in the next couple of days, the MVRV for short-term holders and development activity, network activity in terms of daily active addresses. Look at these three metrics over the next couple of days. If they continue to follow the trends that they have at the moment, it might be a bad sign for QNT. Okay, that's kind of a very brief, very quick analysis of what I'm seeing for QNT. Gary, any other questions that we can cover at the moment?
Just 2 coins left, and that's all. Do we have time to review 2 more coins?
What were the coins?
Chainlink and DMG.
Oh, okay. Let's look at. I think Brian, you already mentioned Chainlink, right? You said that the general sort of daily active addresses or network activity is relatively high, and its NVT.
I did.
Yeah, and its NVT is also sort of flashing good signs, right?
Yeah, token circulation and DAA are looking good on Link. Just beware that MVRV long short diff is still very high for it. High as in overbought, according to that indicator.
Right. Let me see the social volume because I actually got a notification that Chainlink was in trending words a few days ago, which is usually a sign of a top. Let's see. Yep, there it is. Okay, so let's zoom out a bit so we can see this beauty. So a few days ago, along the lines of Chainlink's rally, I got a notification on my. So you can set up alerts essentially to let you know when a certain coin ends up on our list of emerging trends. What are emerging trends? If you're not familiar, we have this list of the top 10 words that are gaining the most sort of steam or ground on crypto social media every hour. Now, this is basically the words or the coins that are gaining the most attention of the crowd at any particular time. Like, for example, now you can see Prism and DogeCoin, ARPA, all of these coins kind of capturing the crowd's attention. This is usually a pretty bearish sign for the coin's price action. As you can see here, these extreme spikes in social volume for Chainlink tend to correlate with short-term price stops and local corrections. We can see it here. We can see it very clearly here. Here before this minor correction, we can see it here before this consolidation correction, and once again we saw it here like clockwork. So the fact that Chainlink was kind of getting a bit too hot for its own good, and I think it was just asking for a correction, at least as far as social hype or crowd hype was concerned. We're now seeing it kind of revert back to its normal levels, which is good. I wouldn't be all too surprised if we see the general sort of crowd attention kind of move away a little bit from Chainlink. I wouldn't be surprised to see another break upward. Let's see once again the general sort of sell pressure applied to Chainlink in the past couple of weeks and months. Yeah, okay, so we saw a bit of a rise here along the price rally. We saw the first one really here in the middle of the rally, and then another spike in exchange inflow as we were nearing the top. Since then, it's kind of reverted back to its normal levels, not all that much in the past 24 to maybe 36 hours. The MVRV, 30-day MVRV is probably going to be crazy high right here. Yep. Okay, let's see the historical levels. Okay, so this is the 30-day MVRV for the past year, right? Yeah, for the past year for Chainlink. So you can see that it kind of was asking for a correction as far as the levels were concerned. So at the stop here, the 30-day MVRV or the 30-day profit or loss was 34%. And usually this MVRV does tend to peak at around, so this is 38, 36, 42, 32, 38, 41. So anywhere between like 35 and 42, 45%, the short-term link holders are happy to start dumping their bags. And this is usually not a great sign. Once again, I love these divergences here between MVRV and price. So you can see here the MVRV is starting to grow along the price. And so it peaks here at, what is this, 1.32, so 32%. And then the MVRV starts going down, although the price of MVRV has continued to rise, indicating that once again the short-term holders are now moving away from their positions, offloading their bags, which has led to this, increased sell pressure and a short-term price correction. So not surprised all that much that Link has kind of, experienced a short-term price correction just recently. At the moment, it's going down. The MVRV is going back to a safe zone. I would like it to be a bit. So this last spike, last drop, I would ignore, but this one, so currently it's around 20%. I think I would like it to be even lower, maybe go all the way to like 10%. As far as the profit margins for short-term holders, before I would be content to go back into Chainlink maybe. But for the time being, yeah, it's going back to a normal zone as far as short-term holders are concerned. Their profit margins or their bags are not that big anymore, so they don't really have too much of an incentive to sell. Actually, let's look at the mean dollar age for Chainlink as well. Let's see if the trend is still accumulating or if it's distribution. Right. Okay. Great. So what you're seeing right now is what we call mean dollar invested age. Essentially, without going into too much details, you can go to insights.santiment.net and you can search for mean age in an article about it. But what this metric is trying to capture is the movement of coins on the network, especially dormant coins. So when we see these rising slopes in mean dollar age, that usually indicates that the average age of coins on the network is growing, meaning that on average coins are remaining in their addresses, indicating an accumulation period where people are content with sitting on their bags and not really doing a whole lot, but just waiting for the price to rise. And as usual, these sort of accumulation periods do tend to correlate with price rallies for the coins. When we see these drops in mean dollar invested age, this is usually an indication that coins are on average starting to become more active on the network. This can indicate a start of a distribution period. Now, Max, I know that you and I kind of have different interpretations of what this metric might mean. For me personally, very often I see this particular pattern occur where the mean dollar invested age tends to drop pretty significantly right around local tops, indicating that people are moving away from accumulating into distribution, into moving their bags very heavily, which tends to impact the price negatively. Like I think if we go to KNC, there's a similar thing that we can see there as well. Yeah, so here you go. For KNC, we saw the mean dollar invested age drop significantly here right at the start of this consolidation period, and then we saw it drop significantly once again around this top as well.
Now that right before it jumped up. This is my theory, or this is my understanding of crowd.
Where?
It started decreasing mean dollar age, but it means it's a sign for accelerated bull trend.
So here, right?
Here, and then it goes even higher. The same for Chainlink.
Yeah. But short-term wise, it does tend to correlate with, like, at the very least. Yeah. So here we can see it kind of starting to lead to a
consolidation period. Behind mean dollar age is that it's acceleration of inflow of new money, and when you see it in the bull market, it means it's on-chain inverse. Okay, not it's on-chain reflection of crowd is flowing into it, and it means the price will go up. Sure. In the beginning, the first decline, it might mean redistribution, and it takes time. But then I would normally compare it with mean dollar age. When it gets to critical values, like I think 4 weeks is very critical. It's very short money. Yeah, it's mean dollar invested age. So yeah, exactly. So what do we have now? What is the value of it?
Let's see for Chainlink. By the way,
just for the current value. It doesn't matter for this.
Can't see.
So it's mean dollar.
It's 242 days.
It's days, yeah. Well, there is some. So yeah, 4 weeks. So I remember it was like super critical. Like it cannot go lower. And
yeah,
but anyway, it's in my opinion, it's one of the best, and I've never seen it on other platforms, and because. By itself, on-chain metric is not used widely by speculators. Now a little bit more, but this specific metric, I don't know anyone using it.
Yeah, I don't know either. I mean, yeah.
So it has plenty of alpha, which is really should be used.
Like,
so I really encourage everyone start in researching it and understanding it. It's very powerful.
Like I mentioned, you can look at it here. It drops right at the start of this, consolidation period. It drops here once again before the start of consolidation period, and then it drops here before the correction. So I think short-term wise, it could kind of have an adverse impact on the price. Long-term wise, yes, it could sort of mean that we are, we could be headed for another leg upward. But as far as short-term price action, or if you're swing trading, I wouldn't necessarily call it a great signal.
Yeah. Short term, if you are in a trade, you can use it for exit. Yeah, it's very good one. Yeah. If you're not
I've got
in a trade,
a
you can start using it for considering if you go into the coin.
Yeah. Sir,
yeah,
Brian, what did you say?
I've got a Sandsheets template for mean dollar invested age and mean age if anyone is interested. To just give a quick glance at it right now, the mean dollar invested age tab is showing that ZRX and REN are looking the best over the last 3 months in terms of the amount of dips they've had, followed by BAT and Augur. So keep in mind those four.
Let's
ZRX,
take a look at 0x.
Yeah, this is the absolute best of the 15 or so that I track.
All right, so once again for 0x, right? Here, a drop before the drop. Here, a small drop at the local top. Here, yeah, it's kind of in the middle. This is maybe inconclusive. You can say that it kind of led to the short-term correction, but then once again, right here, right with the before the correction, we see a sort of a strong dip in the 0x mean dollar invested. It's quite interesting. It's all I'm gonna say. Well, you can interpret it in different ways. This is the way that I've looked at it on a short-term scale. For altcoins, at least, these sudden dips in mean dollar invested age usually, to me, are pretty bearish signal. Right. Okay. What was the last one, Gary, that we wanted to look at? Damage? Do we have on-chain data for damage? I mean DMG.
It's DMG.
Yeah.
It's a pretty new token. I'm not sure we really have enough data for it.
When was it? Yeah. Why did I call it damage? I don't know. Okay.
We don't. It's too new on chain. Yeah, I was checking the other day.
Yeah. Okay. It's
They have quite nice organized army of shills here. I see it in many channels.
Yeah.
So, but yeah, it's too little data at the moment.
It's still like it's similar to Compound, right? We're starting to accumulate data, but it's still too early to see.
Yeah. In 1 week, Compound will be cool already. A little bit. I see some patterns, but still too early.
Yeah. Like let's look at last.
No, keep it. It's a really long time, 1.5 hours. So for DMG, for damage, we don't have Compound in 1 week. We can try to cover it. It's getting interesting.
Yeah.
Something is going on there.
Yep. All right. I think that's gonna call it. We're gonna call it a day there. Sorry, it's been a bit longer than we expected, but good questions, and I hope that you enjoyed the analysis. Obviously, this was very impromptu. Market analysis and coin analysis. I really need to go into more detail before really making any sort of overarching conclusions. But if you would like us to, talk about this further, the link to our Discord is in the chat, or in the description of this video. So be sure to join our chat channels or our Discord servers where we talk about this stuff every day. Anyway, thank you everyone so much for checking out the stream. Thank you everyone from the Santiment team that joined me today to discuss these topics. I hope you found this useful. I hope you found it enjoyable. If you did, please be sure to like and maybe even comment on this video, just so we can kind of trick the YouTube algorithm into showing it to more people and exposing our metrics and tools to a wider audience. Thank you once again for everyone joining us. Until next week, I want to thank all of you for that are listening to this live or are listening to this after the fact, and I'll talk to all of you in 7 days.
Much appreciated for leading, Dino. Thanks, everyone.
Yeah, thank you. Bye-bye.
Thanks, guys.
Thanks, guys.
Thanks, Kelvin, for staying so long.
And we're up. All right. Thank you, everyone. Gonna end the stream now. I think that means that we're gonna have a few more minutes for people to leave their comments, and after that, we're gonna move it to Discord to chat. Thanks once again for staying along, and check out santiment.net for more information on our metrics. All right, bye-bye.